So firstly, everyone, happy Thursday and welcome to our weekly podcast. I'm very honored and flattered to have a very impressive person to talk about private placement life insurance, which we affectionately call PPLI. So this is a very sophisticated and very powerful product. And it's coincidentally a product that I've been happy to work on when I ran the private wealth practice for McKinsey, because the partners of McKinsey all opted into that product. So it was well vetted. It's a product that honestly we could spend hours and hours on it. So
private placement life insurance, essentially in a nutshell, is a better way for a wealthy client to better manage their after-tax returns. Our firm, BHJ, was started in the early 90s by my father, Dean Hamilton. And he at the time kind of started his own business based off his experience running or co-running insurance companies in the 80s, always focused on the investment side of that business, looking for distribution opportunities that required low overhead, institutionally priced, but very much focused on the investment side of the insurance business. He at the time was a consultant to a very large fixed income manager, Offutt Bank at the time. They've evolved into a couple different firms since then, where they created a very simple kind of 20 basis point retail annuity wrap around one of their fixed income strategies. And very quickly, with their client base, raised assets, just using the concept of tax deferral, until one of their biggest clients said, why wouldn't I use life insurance and make that whole portfolio income tax free?
Okay, so basically the bulk of this next section or session is going to be Jennifer describing private placement life, but at a super duper high level, it gives you the ability to defer taxes on your investments. That's what we used it for at McKinsey, but we also used it for trust estate planning. So it has other side benefits. But Jennifer basically said she got into this business because she wanted tax deferral. And tell me anyone that doesn't want tax deferral, because I don't know of it. And the beauty of this product has become much more mainstream. When I launched it, your liquid net worth ideally was 20 million and above to make the math work, but it's become much more mainstream, more affordable. So that 20 million, Jennifer, would you say 2 million is the lower end of the range to do a policy like this?
Yeah, so if you think, and I'm not sure what the insurance knowledge is of everyone here on the call, but basically a private placement life insurance policy is very focused on creating an investment story using the tax benefits that are in all insurance policies.
Sure.
So it's, again, when you invest on the taxable side, you are not investing on a tax deferred basis. Your portfolio is going to be taxed however it's invested each year. With private placement, as mentioned, whatever you're invested in, it's going to grow income tax free forever as long as the policy stays in place. Again, income tax elimination, no on the taxable side, but on private placement, yes. And the only caveat would be if for some reason you decided to surrender your policy. There are no surrender fees on private placement life policies. You can, if you decide in year 10 that you just don't want the policy, you can surrender the policy where, money's paid to you depending on the liquidity of what it's invested in, as it comes due. And any gains, though, will be taxed as ordinary income in that year.
My pleasure. So I'm going to end it there, but I really appreciate everyone being on the call. And Jennifer, I thought you were terrific, so thank you very much.
Well, thank you for the opportunity.
And I wish everyone a phenomenal rest of your day, and we'll all talk soon. We will be having another session next Thursday, so looking forward to our next event, and I hope everyone has a great rest of the week.